Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin crashed below $67,000 and Ethereum dropped under $2,000 as crypto markets experienced their worst day in weeks, with over $450 million in leveraged positions liquidated in 24 hours. Bitcoin is currently trading at $66,179, down nearly 4% and touching its lowest level since early March. The sell-off intensified as $14 billion in Bitcoin and Ethereum options expired on Deribit. Ethereum is trading at $1,995, while XRP holds at $1.34, despite the SEC deadline for 91 ETF applications passing yesterday. Crypto stocks suffered alongside, with Coinbase down 7%, Strategy falling over 5%, and mining stocks dropping 5 to 8%. Over $500 million in total positions were wiped out, with 90% from long positions. The cause is a toxic macro cocktail. Oil prices surged toward $110 per barrel as President Trump delayed planned strikes on Iran by 10 days. The 10-year Treasury yield climbed to 4.5%, its highest since July. Bitcoin ETF outflows hit $171 million in the largest single-day redemption in 3 weeks. Retail investors are capitulating. The Fear and Greed Index has been stuck in extreme fear territory between 10 and 13 for 46 consecutive days. Glassnode data shows holders with under 1 Bitcoin are aggressively distributing, while whales holding 1,000 to 10,000 Bitcoin remain neutral. XRP faces particular headwinds despite regulatory progress. The token stalled near $1.35 after the SEC and CFTC jointly classified 16 digital assets, including XRP, as commodities on March 17th. Analyst Sam Dowdu identifies 3 problems. Bitcoin dominance remains elevated at 58.6%. Large holders have liquidated approximately $6 billion in XRP since the July 2025 peak, and 60% of circulating supply is held above current levels with an average cost basis of $1.44. XRP ETF inflows are insufficient to absorb this supply. Total assets under management fell from $1.65 billion in January to approximately $1 billion. On a brighter note, Morgan Stanley filed for a spot Bitcoin ETF with a record low fee of 0.14%. With 16,000 financial advisors managing $8 trillion in client assets, even a 2% allocation would equal $160 billion. The move signals major banks now treat Bitcoin as permanent infrastructure. The week closes with critical uncertainty. President Trump's 10-day diplomatic pause on Iran expires this weekend, and the PCE inflation report drops soon. If Bitcoin loses the $66,000 support cleanly, the next stop could be $61,000 or lower. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.